Hey, I was listening to a recent podcast called The Great Retirement Debate with Ed Slott and Jeffrey Levine. They debate the pros and cons of certain things, and they discussed 8 reasons why you may not want to do a Roth conversion. You may want to avoid a Roth conversion. And I know that sounds counterintuitive because we do lots of videos on why you do want to do Roth conversions. But here are 8 reasons you may want to avoid it for your situation. Coming up next. Hey, this is Mel Stubbs. I'm a financial planner at Christy Capital Management, where we're helping federal employees plan and execute better retirement strategies. Ed Slott, who's a nationally recognized IRA expert, and Jeff Levine, who's the Chief Planning Officer for Buckingham Strategic Wealth, they go head-to-head debating the pros and cons of certain retirement strategies. Both of them are usually very pro-Roth, as am I. But here are some reasons why you may not want to do Roth. The first reason is if the upfront tax burden is just too much to bear. Nobody really wants to pay the tax, but depending on what tax bracket you're in, it may not make sense. We find that most people are in the 22% bracket or even the 24% bracket, and they're okay paying the tax now in those brackets. But if you find yourself in the 37% bracket and you think you're going to be in a lower tax bracket later, then you may want to postpone those taxes for later. The second reason is that the conversions could interfere with your charitable giving strategies. Once you reach the age of 70 and a half, you can do what's called a qualified charitable distribution, or a QCD, where you give money to charity directly from your IRA and you avoid the taxation on it. And so if you're charitably minded and you're already giving to charity, then this can be a more tax efficient way to do it once you hit the age 70 and a half. Now, you can only do this from a traditional IRA. You cannot do it from traditional TSP. They just don't allow it. Now, so if you Roth convert everything where you have zero traditional money, then you would not be able to do a qualified charitable distribution. Depending on your situation and how charitably minded you are, keeping some traditional money may be what's needed. So if this is you, then maybe Roth convert some, but maybe don't do all of it. Another reason they brought up is that some people may want clarity about the tax policy, so they want to wait. Now, both of them think it's a safer bet to assume that tax rates are going to increase in the future. And if that's true, then that would be a reason that you would actually want to do a Roth. But the Trump tax cuts did lower taxes, which shows that taxes don't always go up. If the tax cuts expire, then rates will go back to where they were. But if you just want more clarity, then you may want to hold off doing a Roth until later. Another reason you may not want to Roth convert everything is that your beneficiaries, maybe they're going to be in a lower income level than you are. If you die and leave money to your children, let's say, they have to pay taxes at their tax bracket. If their brackets are going to be dramatically less than yours, then that may be the argument to just not do so much Roth. Another reason to not do Roth is if you anticipate having really large medical bills. It's not uncommon to see people have $50,000 or $100,000 of medical expenses in a single year. It could be hospital bills, long-term care costs, maybe renovations to the home for medical reasons. If the only anticipated money to be able to pay for this would be an IRA, then you may not want to convert at all. As you take the money out from the IRAs, it'll be taxed, but then you can claim the medical deduction to offset a lot of it. And depending on the size of those expenses, it may be better to use traditional IRA to cover that cost. Another reason people may be hesitant to do Roth conversions now is that Roth conversions are permanent. Several years ago, you could do a Roth conversion in the beginning of the year, and then by the end of the year, if it no longer made sense, you could do what they called a recharacterization and undo it. Now you can no longer do that. Now, another reason for high-earning self-employed people is in 2017, the tax overhaul, there is a QBI deduction that allows business owners to deduct up to 20% of qualified business income. Ed Slott said, and I quote, "If you were under certain income limits for certain groups, without getting into the weeds, a Roth conversion can actually kill this deduction opportunity. It could really cost you in that sense to convert in the wrong year." Now, if you're a federal employee, this is probably not going to be pertaining to you. The last reason you may not want to Roth convert is that some people distrust that Roth accounts will always be tax-free. Ed Slott said, "I don't think they'll do it, if only because it would kill the golden goose." The Roth IRA produces a lot of revenue, but if that's kind of a concern for you right now, then you may want to not Roth convert. But when you look at the amount of money that's in traditional accounts in America compared to the amount of money in a Roth, the traditional amount is just so much larger. On a percentage basis, there's just not that much Roth in America. If the IRS needs more tax dollars, all they have to do is change the tax brackets to be able to tax the traditional accounts more, and frankly, they would be taxing your income more. So those tax brackets change all the time and nobody really gets mad about it. But for Congress to go back and double tax the Roth, it might send people in an uproar. So I don't think that they would do that just because it would make people extra upset and just because mathematically it doesn't make much sense for them to do it. There's a whole lot more money that's already taxable that all they have to do is raise the tax rates on. So here are some reasons why you may not want to do a Roth, but there are a lot of reasons why you may want to do a Roth. But to get more Roth, you have to do certain things and you don't want to make mistakes. So check out this video right here, Roth conversion mistakes. If you need help, go to ChristyCapital.com and click Talk to an Advisor. Go to ChristyCapital.com/webinars and sign up for our monthly federal retirement webinar. I'm Mel Stubbs. I'll see you next time.